Looking to grow your money long-term? These 5 stocks could be your smartest move this May. With inflation still high and tech rebounding, picking the right long-term stocks is crucial. In this video, we'll reveal 5 powerful companies worth buying now and holding for years. We're talking about companies with a proven track record of growth, strong fundamentals, and the potential to outperform the market in the years to come. Stick around to the end, because stock number 3 has some serious potential that most people are completely missing. First up, we've got Apple, the tech giant that needs no introduction. You know them, you probably use their products every day, from iPhones to MacBooks, and even their wearables like the Apple Watch. But are they still a good investment? In short, yes. Despite being a household name, Apple continues to show strong growth potential. Apple is currently trading around $175 a share, which is impressive given the market's volatility. And despite some recent dips, their year-to-date performance is up over 30%. This kind of resilience is rare in today's market. Why is Apple a good long-term hold? It's not just about their current stock price, because they're not just an iPhone company anymore. They've diversified their portfolio significantly. They've successfully expanded into services like Apple Music, Apple Pay, and their App Store, which have become significant revenue streams, creating a whole ecosystem that keeps users hooked. This ecosystem makes it hard for users to switch to competitors. Analysts are bullish on Apple, and for good reason. With a lot of price targets exceeding $200 in the next 12 months, the future looks promising. But here's the thing. Even if it doesn't hit those targets immediately, the company's fundamentals are strong. Apple's history of innovation and brand loyalty makes it a solid long-term bet. Their customer base is incredibly loyal. Just remember, no investment is without risk. Market conditions can change rapidly, and Apple's success is heavily tied to consumer spending, which can be unpredictable. So keep an eye on the overall economy. A strong economy generally bodes well for Apple, but a downturn could impact their performance. Next up is Nvidia, a company that's been absolutely crushing it lately. They're the leading provider of graphics processing units, or GPUs, which are essential for everything from gaming to data centers to, you guessed it, artificial intelligence. Nvidia is trading around $280 a share, and their year-to-date performance is mind-blowing, up over 90%. Now you might be thinking, isn't that a little too expensive? And hey, it's definitely not cheap. But Nvidia's dominance in the GPU market, especially with the explosion of AI, makes them a compelling long-term play. Analysts are predicting continued growth for Nvidia, with some even setting price targets above $350. Of course, competition in the chip industry is fierce, so Nvidia needs to stay ahead of the curve. But with their track record of innovation and strategic acquisitions, they're well positioned to do just that. Chapter 3, Tesla, TSLA. The electric revolution is here. Now for the stock you've all been waiting for, Tesla. This company has been at the forefront of the electric vehicle revolution, capturing the imagination of investors and car enthusiasts alike. This is the one with the surprising potential I mentioned earlier. Tesla has consistently pushed the boundaries of what's possible in the automotive industry. Tesla's been on a wild ride, and it's currently trading around $170 a share. The stock has seen its ups and downs, but it remains a focal point for many investors. Now, their recent performance hasn't been as stellar as Nvidia's, but here's why I'm still bullish on Tesla long-term. They are the dominant player in the electric vehicle market. Their innovation and market presence are unmatched. And it's not just about cars anymore. Tesla is diversifying its portfolio to include renewable energy solutions. Tesla is also making waves in renewable energy with their solar panels and battery storage solutions. These innovations are setting the stage for a more sustainable future. Analysts are divided on Tesla, with some setting price targets above $200 and others remaining skeptical. The debate around Tesla's valuation is as dynamic as the company itself. The truth is, Tesla is a volatile stock, and Elon Musk's antics don't always help. His bold moves and statements often lead to significant market reactions. But if you believe in the future of electric vehicles and sustainable energy, Tesla is a company you want to be invested in. Their vision and execution make them a compelling choice for long-term investors. Chapter 4. Johnson & Johnson, J&J, the reliable dividend king. Let's switch gears now and talk about something a little different, Johnson & Johnson. Now, this isn't a flashy tech company promising explosive growth. But it's a solid, dependable company that's been around for over a century. Founded in 1886, Johnson & Johnson has grown into a global healthcare powerhouse, touching nearly every aspect of the medical field. They're a healthcare giant with a diverse portfolio of products, from consumer brands like Band-Aids and Tylenol, to medical devices and pharmaceuticals. Their reach extends into surgical products, orthopedics, and even cancer treatments, making them a critical player in the healthcare industry. J&J is trading around $165 a share, and while their recent performance has been relatively flat, they offer something many other companies on this list don't: a consistent dividend. This stability is particularly appealing in volatile markets. In fact, Johnson & Johnson is a dividend king, meaning they've increased their dividend for over 50 consecutive years. This remarkable achievement underscores their financial health and commitment to returning value to shareholders. That's the kind of stability and income potential that long-term investors love. For those looking to build a reliable income stream, J&J's dividends are a significant draw. Analysts are generally positive on J&J, with price targets ranging from $170 to $190. This optimism is based on their strong fundamentals and diversified business model. Of course, no investment is without risk, and J&J has faced some legal challenges in recent years. These issues have included high-profile lawsuits and regulatory scrutiny, which have occasionally impacted their stock price. But their strong track record and commitment to innovation make them a solid choice for long-term investors seeking stability and income. With ongoing investments in research and development, Johnson & Johnson continues to push the boundaries of medical science, ensuring they remain at the forefront of the healthcare industry. Chapter 5. Alphabet, Google, the undisputed king of online advertising. Last but not least, we have Alphabet, the parent company of Google. They're the kings of online advertising, with a market share that's practically untouchable. Google is trading around $115 a share, and their year-to-date performance is up over 20%. Now you might be thinking, isn't everyone and their grandma already invested in Google? And you're not wrong. But here's the thing. Alphabet is more than just Google search. They've got YouTube, Android, Google Cloud, and a whole bunch of other businesses that are growing rapidly. Analysts are optimistic about Alphabet's future, with many setting price targets above $130. Of course, antitrust concerns and competition from companies like Amazon are always a risk, but Alphabet's massive scale, constant innovation, and strong financials make them a compelling long-term investment. Outro, don't wait, start investing today. So there you have it, 5 stocks that could make you a lot of money in the long run. These aren't just hype stocks, they've got the fundamentals to ride long-term trends. Remember, this is not financial advice, and I'm just a guy on YouTube. Do your own research, invest responsibly, and only invest what you can afford to lose. Now I want to hear from you. Want us to cover dividend stocks next? Drop a money bag emoji in the comments below,